Morning traders, Paul here with GammaEdge. Today is Monday, the 7th of November. Let's get started. The fine print. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, all signals are short or in cash, depending on how you look at things. The short-term timer may be attempting to reverse to the upside, but note the intermediate and long-term timers are still bearish and to the downside. Paper trades only, of course. Nothing here is a recommendation to buy or sell any security. Plus GEX, which is our upper boundary, remains at 4,100 in the SPX. We don't anticipate any fast run up to that level. Minus GEX is bouncing between 3,500 and 36. Right now it's at 35. You'll see that 36 could easily be in play here. Just depends on if we see some puts going in at 3,600, driving that up. We are in the transition range for the SPX. What that means in the big picture is dealer pressure either way, to the upside or to the downside, is really small relative to later expiries. We are expecting some fireworks later next week, or later this week and into next week. So we are expecting some ranging, fairly limited, under 3% open, high, low, close. Realistically, short-term upside resistance does look around the 38.20 to 38.35. The JPM December short calls that are up there, 44,500, are already starting to appear. And that is definitely going to be something to contend with all the way into the end of the quarter. We are watching for the upper range to be in play today. It's well within the expected move range, and it's coincident with a number of things. So we could see definitely a push towards that 38.20, 38.35, maybe even 38.40 range. Don't think we're going to get much above it, though, for a number of reasons. In the Delta-Moneyness category, the pre-market levels reveal a large OTM put dominance in the SPX. It's also confirmed somewhat in the SPY for the 0 DTE, and when you have that condition, that could drive the dealers to buy futures or the underlying, but in a controlled manner. Now, if those OTM extrinsic value levels are monetized, that could cause some reactions by the dealers, and that would be sudden adjustments that we would see in prices. Either way, when we see a large OTM put dominance in the moneyness category, we have a slight upward bias on the SPX. Taking a look at the market model, I've highlighted the 1, 2, 3, and then a cautionary 4. You can see end of day evaluation for each of these showed that last week, as we started to collapse, we were calling all this out. Within the Discord, you should be familiar with this. I put some bubbles in here kind of showing the different signals that we're looking at. The key here is where we are here at this 4, circle 4, and you can see that we had a midday reversal, which is usually a good thing. We like to see that type of behavior. It still does leave the long-term timer in a downward trend off signal. The intermediate timer is still in an off signal or cash signal, but now with this converging, possibly pointing upwards towards the ribbon, that could be indicative of, another run at the top. So we'll just have to wait and see. Short term, if we start getting these shortest term moving averages crossing back over, this is crossing to the downside. If we get them to cross to the upside, that would be a confirmation for a very short trial balloon. Paper trades only, of course, to go to the long side, and then progressive exposure as the timer starts converting. Key levels that we're watching today, 4,100, as I said, 3,500 down on the minus side. So these are the two goalposts. Want to just keep in mind that the 3,600 level is also in play, so we could see some noise back and forth throughout the week, depending on whether we see more calls, or more puts go in at the 36 or keep building at the 35. We'll just have to wait and see what happens. Expected move, 2.87, that is open, high, low, close. We don't think we're going to be anywhere near that today for various reasons. This is calculated, conservatively calculated based upon some internal metrics, and I think this is a very fat range for today. We'll see. The weekly, key things that I want you to be aware of. So here we are right here on the yellow line. We're right in the middle of transition. Here's that JPM December OPEX starting to already rear its ugly head. And while this exists at the top of transition, that could almost be a pinning factor. We're going to have to watch this. This could present some upside resistance until it's absorbed. It's not going to get absorbed until you start seeing more calls go in, effectively neutralizing the short calls that exist at this level. So all things considered, the Delta structure is also in a state of flux. You can see the back and forth red green, red green, and there is no real pressure here in the weekly or the PM settled SPX. Taking a look at the 0 DTE, again we're at the top of the 0 DTE range. Moneyness, you can see what happens as we start moving upward here. The gamma levels into a positive gamma regime. You can also see here though in the deltas that it's going to be pretty hard to start making progress over this 3820 until we start getting more calls going in, basically shifting the overall Delta-Moneyness within the system. Note here 3850 is that upside dominance for the expiry today. 3830 is almost coincident with that 3835 that we were just talking about with the JPM. So we've got kind of a double whammy going on in that same area. Want to pay attention to that. So we do think this range of 3820 to 3835-ish is going to be, kind of hard to get over. To the downside, 3700 has to be, the support level. We don't see us going below that. If we do lose it, you can see there's not a lot below it. So we could actually see quite a fall if we start moving in that particular direction. Taking a look at the combo, which is the AM and the PM settled SPX, you can see overhead the deltas are pretty red. That means they are dominated by puts, and right now you can imagine that those puts are fairly significant in magnitude, just given the numbers of the delta notionals here. To the downside, a lot of green, call dominated, and so we're right in this transition area. That's where the yellow line is. You can see because of that, we're almost locked in a range, and so I'm not expecting a lot of push. Again, here's that range, the upside of that range, and then to the downside, as we were saying, the 3700 has some noise associated with it. You can see the 3650 and then 36, and remember 35 actually is even larger than this 36 that's sitting down here. Over here, about 29 to 30% of the gamma expires between now and the end of, or the monthly expiry, so keep that in mind. If we see that number growing, that'll be interesting because that forms a large discontinuity in the overall markets. Taking a look at the SPY, we had an error on our SPX to calculate the moneyness today, the transition levels, so I updated this to the SPY. You can see the key levels for the SPY. We're thinking the 3380 level could be a upside reversal point for today. I know we're above that even in the pre-market. We could see some downward profit taking above this level, so just be aware of that. A lot of the 0 DT will drive that overall, but nevertheless, we are moving up day over day, and that is bullish. Taking a look at the moneyness structure for the SPX, the edge here represents the 0 DTE. If you're not familiar with looking at these, we've got ITM calls here, OTM calls on this side. Over here we've got the puts, OTM on this side, ITM over here. You can see virtually no ITM puts are coming off today. When we take a look at the edge, which is the 0 DTE, you can see there's actually quite a bit coming into play here today. So this will either collapse to zero value, or this will have some extrinsic value that will be monetized today. When we monetize this, it could drive dealer response, and you can see the magnitudes of what's coming off today are actually fairly significant. There's virtually nothing over here on the call side. It's all being driven by the put deltas, so be aware of that today. Taking a look at the overall SPX structure, here's that 4100 upside line. You can see also we have a line up here which could come into play here. But nevertheless, 4100 there. Here's the 3500. You can see the magnitudes are very, very close to each other. 35, 36 down here. And you can see we're sitting right in the middle of this transition boundary. It's a good launching pad to move up, but I think we're going to be limited to because of the JPMs. that are sitting up there for December. And then to the downside, we've actually got this spike that's forming at 36.80. Don't know the source of that. Not sure where that's coming. It's actually a fairly significant level. So it is looking like we could remain somewhat range bound here. We're right at transition, and again, because we are in transition, dealer pressure is minimized and noisy, so be aware of that and be expecting that. And you can see what's being sold up here. These little red dots really don't have any impact on the overall conversation. So a lot of calls being sold up here, but they have virtually no impact on gammas for us. So that's it for today. If you like today's comment or have any questions, we urge you to come into GammaEdge.us, click on the pricing tab. That'll get you into the Discord once you fill all that out. A great group of traders, great group of individuals basically teaching what we see in this thing called gamma, and would urge you to come in and see how the levels can improve your thesis formulation. Follow us on Twitter, please, at GammaEdges with an S, and then here on YouTube. If you like today's content, give me immediate feedback by smashing that like button, and of course, subscribe to us to be notified next time Taylor, myself, or Michael posts a new video. So with that, I bid you farewell. Let's make it a great week. Hope to see you in the Discord. Thanks, everyone.